Hey traders, Mike Sir here. Welcome back to my channel where I profile the top traders in the world and teach you how to replicate their incredible success. Now, I always like to profile traders who literally start with a small amount of money and turn them into multi-millions. And this is exactly what Tim Grittani did as he turned $1,500 of his own money into well over $13 million. An impressive 860,000% return in a little over 10 years. So in this video, I'm going to share with you his trading strategy and teach you exactly how he managed to achieve this incredible 8-figure net worth. So let's get started. Tim was a finance major at Marquette University in 2011 and became increasingly fascinated by the workings of the stock market during his time in college. Now, drawn to stocks from his background in sports betting and online poker, he had about $1,500 to his name and needed more money to open up a day trading account. Now, having borrowed $12,000 from his parents with a promise not to touch the borrowed money, he set out to trade. Now, feeling limited by his $1,500, Tim stayed away from expensive stocks like Google and Apple and decided to try his hand at buying penny stocks. Now, by the end of the year, he made over $4,000 using the skills he gained and convinced his parents to let him stay at home to trade full-time after graduation. His parents' only stipulation was that Tim would be able to make at least $10,000 in 3 months, or else he would have to find a job or find his own place to trade and live. Fortunately for Tim, by mid-March 2012, he accomplished his goal of $10,000 and the rest is history. Now you can see from this chart that tracks Tim's trading profits, his profits have steadily grown over time. He made his first 6-figure income in 2013 and then became a millionaire in 2014. Now as his trading became more consistent, his profits climbed to $5 million by the end of 2017. By 2020, his profits skyrocketed to $10 million, and by the end of 2022, Tim surpassed $13 million in total profits. You can see the equity curve shows how consistent Tim's trading was and how little drawdown he had over his current trading career. Tim started his trading career focused on penny stocks. Now, many of these companies are smaller companies and therefore more speculative and riskier in nature. They don't trade on a major exchange like the NASDAQ or New York Stock Exchange, but rather on the less regulated OTC markets. In fact, penny stocks are notorious for being part of so-called pump and dump schemes in which scammers buy up shares and then promote it as the next hot stock on social media. Now, once the stock price is artificially pumped up by all the hype, the scammers would sell their stake, leaving unsuspecting investors with big losses. Now, Tim wouldn't participate in the pump and dump schemes, but rather he recognized how to make money out of pump and dump scams. One of Tim's biggest profits early on in his trading career was in 2013, where he made over $215,000 betting that Fannie Mae, the mortgage giant stock, would tank after a huge run in its price. And you can see from this chart that the stock price was pumped up from a little over 80 cents to over $5 in a matter of a few weeks without any specific news. Now, Tim recognized that this could be a potential pump and dump scheme, and once he detected that the stock price was losing momentum, he started shorting the stock. Well, he was right, as the stock price fell from $5 all the way to $1.30 in a matter of days. As there were fewer pump and dump schemes and as Tim's capital grew, he switched to day trading big movers on the NASDAQ and New York Stock Exchange. Specifically, he still liked short selling and betting that stocks would go down, but he looks for specific characteristics of a stock. An example is he likes to look for stocks where the price goes parabolic and goes up 100-200% in 1 to 3 trading days. Now he looks for price momentum to slow down on its rise, and then he would like to short the stock. Another example is when a stock has gapped down right at the market open, and he would like to continue to see the stock head much lower due to negative news or earnings. One more example is if a stock hits a previous major resistance level where the stock price wasn't able to break through perhaps a double top chart formation, then he would be interested in shorting the stock at the resistance price levels. Now, if the stock doesn't go lower, then he will place his stop loss above the price resistance level. Most importantly, Tim emphasizes that there is a lot of risk with short selling because there is potential for unlimited losses, because a stock can keep going up 100, 200, 300%, and you as a short seller would need to buy back the stock at those high levels. So how does Tim look for stocks to trade on a daily basis? Well, first off, he utilizes a stock scanner to look for stocks that exhibit volatility, as this means that these stocks can make huge runs on that particular day. Now, Tim used to focus exclusively on penny stocks or lower price stock, but nowadays he prefers to look for stocks that trade on the big exchanges like NASDAQ or the New York Stock Exchange and meet the following criteria. He has to have a percent gain on that day of 20% or more. It has to have liquidity over $3 million, and it has to have a high relative trading volume. Now, once he filters through the stocks, he looks at the charts of each stock and tries to see if any of the stocks exhibit specific daily chart patterns, such as, for example, rounded bottoms, cup and handles, flags, or any specific chart pattern. In addition, he looks at each stock's float, which are the number of shares that the company has issued to the public for trading. Now, if the stock has a low float, then there's a higher chance that the stock price could move up sharply if suddenly many traders decide to buy the stock. Then Tim determines what are his best plays of the day and adds them to his watch list, which he'll monitor throughout the trading day. Before I share with you an example of one of Tim's most profitable trades, as well as one of his biggest losses, please smash that like button and hit subscribe if you haven't already. I would really appreciate your support. Now, even though Tim has become a consistently profitable trader, he has made some terrible mistakes throughout his trading career. He has endured numerous six-figure losses, and in fact, his biggest loss to date has been a whopping $290,000. Now, the biggest reason for his losses has been poor risk management. You see, early on in his trading career, he discovered that the best way to avoid losses on trades that went against him was to double down on his positions. This meant that he would add to his losing positions in order to adjust the average entry price. And this strategy worked for a while, allowing him to achieve a small loss or sometimes even a small gain, instead of incurring the expense of cutting his losses in the first place. The problem is that strategy only works if the stock price reverses in your favor. If the price keeps going against you, then you're adding further losses to your trading account. As a result, this has led to huge six-figure losses that sometimes wiped out entire weeks of profits that Tim had made. In fact, this was exactly what happened to him when he traded LAKE. He started shorting 10,000 shares of the stock at around $9.90 and bet that this price will fall to the lows of the day and beyond. Well, the trade was going very well for Tim as the price fell to $9.60, which were the lows of the day, and he was up $3,000. But suddenly, positive news came out about the company, and the stock price spiked up to $9.90. Now, Tim was quite upset that he just lost $3,000 in profit and refused to believe that the stock price would keep going higher. So what he did, like so many times before, he would average up into his losing positions with the mindset that the stock price will come back down and that he'll be able to exit with a nice profit. Well, the stock price never came back down, and as you can see from this chart, the price went as high as $12 per share. And by the end of the trading day, he stubbornly refused to take the loss and had an unrealized loss of over $16,000. The next day, the stock LAKE gapped up even higher, but his thinking was, well, this might be a good chance to add even more size to his position so that he can get his average price up. And as the price went up to $13, he added more shares to his short position, totaling 20,000 shares. But the stock price kept going higher, and Tim was getting quite uncomfortable here, but he still felt okay in terms of adding more to his losing position. Now, as the price hit a resistance area around $16, he added another 20,000 shares to his short position, totaling 40,000 shares. Now, to his relief, the price finally did start falling down to the $15 price level, but it never broke down. In fact, the price skyrocketed past the $16 price level and went to over $18. And suddenly, Tim was sitting on his worst unrealized loss ever. The stock price refused to drop, and Tim refused to admit defeat. Now, when the stock price came back down to $16, he could have exited his 20,000 shares at break even, but he didn't due to the simple reason that he didn't want to lose and incur any loss at all. Now, all he was thinking at this time was his potential losses and not on what the charts were telling him. Well, as you can see from the chart, the stock price went as high as almost $20 afterwards. And finally, Tim couldn't take the stress anymore and exited about 30,000 shares at around $18. And these were the shares that he was adding to his losing position. His loss on those trades now totaled $100,000. But he still had the original 10,000 shares that he shorted at $9.90, which represented an unrealized loss of $80,000. Now, with some pressure alleviated, Tim felt determined the next morning that he would make back the losses that he incurred. The stock gapped up again and went as high as $22, incurring another $40,000 in unrealized losses for Tim. But finally, the stock price began to fall, and Tim was aggressive in adding 25,000 shares to his short position at $20.50. Now, the stock price continued to fall, and at one point he was up $50,000 on this position. But Tim never exited the trade because he was still down overall in his position and was looking for further downside in the stock. Well, the stock price never fell any further that day, and Tim's $50,000 profit ended up being less than $10,000 by the time that he locked it in. At this moment, he was down $90,000 in realized losses and $100,000 in unrealized losses, but Tim refused to give up. The following day, Tim lost control of his emotions. He kept playing 20,000 to 30,000 shares positions at a time, trying to short on weakness as the price fell, but only to see the stock bounce higher. Now, you can see from the chart that the price refused to break below the $20 per share level and traded between $20 and $22 for almost the entire day. Now, these emotional trades cost Tim an additional $75,000 in losses. Now he was down $165,000 in realized losses and $100,000 in unrealized losses from his initial position. And finally, Tim decided to give up once the price spiked above $22.50. He covered the rest of his 10,000 shares that he shorted at $9.90 and booked a realized $125,000 loss. In total, he incurred a loss of $290,000. Now, the one silver lining in all of this was that Tim finally admitted defeat and exited his entire position at $22.50, because as you can see on this chart, the price continued to go much higher and almost reach $30. Had he continued to hold on to his losing positions, his total losses would have reached almost $700,000. Now, this was a very expensive lesson for Tim, as this $290,000 loss basically gave back a lot of the profits that he had made prior. The lessons he learned were to never let his stubbornness to not admit defeat and take a small loss affect his trading. If a stock surpasses his stop loss point, he won't add any more shares to his losing positions. Also, if he were in a losing trade, he wouldn't continue to trade the same stock, but in fact cut his losses and move on to another stock, which could be more profitable. Another one of Tim's biggest profits was in 2018, when he made over $212,000 trading the company stock CV Sciences, symbol CVSI. This trade was made based on both technical analysis as well as fundamental analysis. First off, from a chart perspective, on May 15th, Tim saw that the price was about to break above the key $1 price resistance level, which were the highs set in both 2016 as well as 2017. Now, Tim bought around 50,000 shares around $1 and held the shares overnight, believing that the stock price was going to go much higher. Well, the next day, Tim expected the stock to gap up higher, but only to see the price actually gap down lower. The price fell below the $1 level, and in the past, if Tim saw this type of scenario, he would just sell all his shares at break even and move on to the next stock. But he started noticing that the breakout pattern seemed to be evolving a bit, and that was normal for the stock to pull back and consolidate for a few days before heading higher. And more importantly, the price stayed above the 90 cents price level, which was the original breakout area. Now, Tim, feeling confident that this was just a consolidation period before the next run-up, he bought more shares and now owned a total of 159,800 shares with an average price of little under 99 cents. Well, his patience paid off, as over the next few weeks, the stock price steadily rose and went as high as $2.78. Now, sensing that the stock price was getting a bit overextended once it reached the $2.40 price area, which was a previous resistance area, he started selling 5,000 to 10,000 shares at a time. His overall average sell price was $2.31, netting him a total profit of $212,000. One of the reasons why Tim was confident holding on to the stock for several weeks was the company's fundamentals. Now, the company had a pretty strong financial position with total assets over $23 million, total liabilities a little over $5 million, stockholders' equity $18 million, also sales revenues above $8 million, and also net income for that year of $619,000. Now, Tim was so used to trading crappy companies which had poor financials or no income at all that he rarely held on to these OTC stocks for more than a few days. Now, with CVSI's strong fundamentals and the stock price staying relatively stable and finally rising, Tim felt comfortable that this could be a home run trade. Thanks for watching. If you like this video, please make sure that you check out my other videos where I profile the other top traders in the world.